Tilray and Canopy Growth are probably the two best known names in their sector, but which is most likely to eventually turn a profit? When you look at their numbers, you wonder if the answer may be neither. Tilray did manage a gross margin of about 28%, but you factor in their sales, general, and administration costs, and they lost almost $20 million in one quarter. And that doesn't even factor in depreciation, impairments, or even financing costs. Looking at Canopy, they had a negative 2% gross margin, and they lost $125 million in one quarter. So if there is a winner in that category, I guess it's Tilray. Both companies have seen their revenues decline for years, but the best way to estimate their most likely future is to assess their brand strengths. I've reviewed some of their brands individually in separate videos, but the best way to sum it up is Tilray's most expensive brand, Broken Coast, is expensive and low quality, in my opinion. When I bought it recently for the purpose of this channel, I asked the bud tender about its popularity, and he said, it usually turns into old inventory. This last quarter, Tilray wrote off so much old inventory that their cost of goods sold turned their margin negative. And for that reason, the numbers I was showing previously were from 2 quarters ago because I thought that would be more fair, but this may be a more accurate representation of their business. I'll say quickly that the Rift brand does seem to have made improvements, but is it enough to save Tilray? I'm not too sure about that. By the way, it's surprisingly uncommon for these large companies to have brands with very different levels of quality because they're grown in different facilities by different people. And it seems as though within some of these companies there's very little communication and they don't learn from each other, which is probably the biggest difference between these two companies because Canopy bought Supreme Cannabis a couple of years ago and acquired not only better facilities but expertise as well. After that, they scrapped their worst brands and improved their flagship brand Tweed to the point where it's actually taking market share now. So despite their even more terrible numbers, I do have more confidence in Canopy. However, there's another company in this sector who's quietly doubled their market share in the last year and a half to become number 2 in Canada. And when you look at Decibel's earnings from the same perspective, you see that they made $5.7 million last quarter. And if you factor in financing costs, they still made $5 million, and even after depreciation, they made almost $3.8 million. So why is it that after 2 years of doing nothing but going down, Tilray still has a valuation of about $1 billion, while Decibel is a little over $50 million? And why hasn't anybody heard of the most profitable, fastest growing Canadian company in the sector? Well, you have.